Now, one thing I noticed is that a lot of people can't qualify for funding because they don't have the proper data points, right? And a lot of this stems from not having either liquidity, banking activity. In today's video, I'm gonna be laying out a blueprint on how you can make some money by leveraging credit, even if you don't have any money. Also, how to manufacture credit data and information to help you get to the next level. Let me give you this scenario. Let's say you have 100,000. All right, so that's $100,000. Now, this can be from your own cash, or this could be, let's say if you got 0% interest credit cards, right? Now, this works better when you have your own cash because, there's no cost to using your own cash, right? Versus 0% credit cards, yes, that first 12 months. But anyways, let's say you have your own cash or you liquidate credit cards, you go through our stacking program, you get $100,000 in 0%, you liquidate it. Now you have 100,000 cash sitting in the bank. So the way the secure BLOC work is that you're going to take this 100K and you're going to put it in a CD account. So you have this 100K CD. And then what the bank is going to do, let's say your banker asks you if you want to open up a cash secured or CD secured business line of credit. What they're going to do is they're going to lock this 100K, right? So this is a 100K CD. It's locked. So they're going to give you maybe like a 5-year CD or a 3-year CD. And then they're going to lock the account so you don't have access to this 100K. And they're going to open up a cash secured BLOC, business line of credit. You got 100K in a BLOC. So look at what you just did, right? You first started with this initial 100K, whether that's your own cash that you saved up or maybe you liquidated some credit cards. So this 100,000 is still in the CD, right? A CD, a money market account or a checking account was considered a demand deposit account. I'll get back to that in just a bit. So now you got this 100K CD and you have $100,000 cash secured business line of credit with a zero balance, right? Because you haven't drew from it yet, all right? What you could do, and again, this is for those who are looking to leverage their credit and qualify for even higher amounts. I'm gonna break it down. So basically what you can do with this, remember, this is $100,000, right? So let's say there's another bank that offers the same thing, right? So we're gonna say bank number 2. All right, so you're gonna draw down from this and put this into a CD at bank number 2. All right. So now it's no longer zero balance. Now you got 100K balance. All right. And then this is now a 100K CD. Notice something, right? This 100K is still sitting in a CD. Nothing has changed. This 100K right here is still sitting in the CD. So the thing about this is that, and I'll get into this, you start off with this first 100,000, you put it into a CD, you got a cash secured BLOC. Basically, this is collateral for this business line of credit. Then you drew on this, went to another bank, put that 100,000 in another CD. Now, guess what? Y'all might be expecting what's going to happen next. Then you can get another 100K secured BLOC. All right, I'm just going to abbreviate secured BLOC. Now, this one has a zero balance. So let's look at what we've done right here. Just starting with this initial 100K. Now, we still got this first CD. So you got a 100K CD. You have a cash secured BLOC, right? So you got a 100K BLOC, and this one has a 100K balance, right? So I'm just gonna say 100K balance. All right. And then we got another 100K CD, and then we got another 100K BLOC with a zero balance. All right, can y'all see that? So let's summarize this. In total, we have 200,000 in CDs, right? A certificate of deposit was considered a demand deposit account. Checking accounts, savings accounts, money market accounts are all considered demand deposit accounts. We have 200K in cash secured BLOCs with a 100K balance. Now I know what some people might be saying, like, what's the whole purpose of all this? Okay, you got 200K in CDs that are locked, you can't touch them. You got 200K in secured BLOC limit, right? Total limits, right? With a 100K balance. This one is going to have, the first one is going to have the 100K balance, right? Because you pulled the money off that, put it into this new CD, and got another 100K secured BLOC. So you have one BLOC with a zero balance, one with a 100K balance. What's the whole purpose of this? I'll tell you. 200,000 in financial trade lines are reporting on your business credit report. That's for one. Secondly, there are banks where that secured BLOC can go to unsecured or graduate the same way it does on the secured credit side with secured credit cards. The same thing can happen with business lines of credit. It's not going to happen overnight or in a couple of months. Usually when it comes for renewal, the thing with these CDs actually have a term, a 3-year term, a 5-year term. So at the end of the term, depending on what you've been doing with that business, you might be able to graduate to an unsecured BLOC. That's a huge benefit. You get the credit reporting aspect of it. The BLOCs can actually unsecure, graduate. And then I think the even bigger point about this is asset verification. So I noticed that a lot of people can't get approved for funding because they don't have any banking activity, or on their balance sheet, they don't have any assets. But what I've actually discovered,